Welcome to today's segment, Level Up Your Lifestyle, Investing for Beginners. As you may have guessed from the title, the first topic we're going to tackle is the hows, whats, whens, and whys of investing. How much it takes to invest, what do I need to get started, when is the right time to invest, and why you should invest. Joining me to help answer these questions and get you on the fast track to investing are Belinda Payne, RF Brokerage Manager, and Holland Grant, COO at the Bahamas International Securities Exchange. Ladies, gentlemen, welcome to the show today.
Thank you.
Thank you. Let's dive right in. Leveling up, investing for beginners. Where do we start with investing? Ms. Payne?
Well, I would say a first-time investor, what you actually need to do is, well, first of all, saving and investing are both ways that you can reach your financial goal. Okay? So saving is you taking monies and putting it into the bank for some type of future goal. Okay? When you're investing, you're putting that money into stocks to get a dividend payout or some sort of income, or into bonds where you're going to receive interest. Okay? So whichever option you decide to do, the final decision is yours. However, typically, investing is a better option.
Okay.
Two reasons why. Investing, first of all, helps to keep up with inflation. So remember when you went to the grocery store with your parents, okay? And you, back in the 90s, so this shows how old I am, but yeah, back in the 90s, you would go to the food store and you would buy grocery. Your parents was buying grocery and your trolley was full. Today, you go to the food store and that may be 2 bags of grocery. That is inflation. That the purchasing power of your money has been corroded, and investing can help with that. Okay. A second point would be that when you invest as opposed to saving, with saving, you're going to be putting up a specific amount. So you're saying, I'm saving $10,000 a month, or, well, that may be a bit much, but let's say you're saving $500 a month towards a future goal. You have to continue to put that specific amount to reach that goal. However, with investing, you actually can inject, you may start with $5,000, injecting less cash, but because you're getting a higher return, you can reach that same financial goal as that person who's had to actually put more cash to reach that goal just saving. And those would be, I'd say, the 2 points I'd start with that I think a beginner should look at.
All right, Jackie, so if I look out of it, when I typically think of saving, I think of you as putting aside money for a rainy day.
All right.
Whereas investing is making your money work for you.
Okay.
So when you're setting out a financial plan, I think the first thing you want to do is accumulate those savings. So ideally, a rule of thumb is you want about 2 months of what your salary is set aside. And what that does is that meets the rainy day, whether it be a medical emergency, car breakdown, whatever.
Okay.
After you've accumulated those savings, then you focus on investing, to me. And that's putting aside money that works towards long-term goals, whether that be retirement, your children's education, but it's money you're setting aside that's accumulating, as Belinda said, at a much higher rate of return and working towards a future goal.
Let me know when we say investing, right? This is outside of savings now. What are we talking about?
So when you're talking about investing, so with savings, you're putting your money in the bank, you're getting an interest rate, which we all know is very low. Okay? When you're talking about investing, you're actually talking about putting your money into securities. You're talking about putting in your money into stocks that may pay dividends, or bonds that you can receive interest, or some mutual funds. So that's what we're talking about when we're saying actually investing. You're putting your money in some sort of vehicle to hopefully get a higher return on that investment.
Many times with investing, when we have this conversation, we get lost in the jargon. Mutual funds, stocks, bonds. Yes, it pays a return, but walk me through now from a beginner standpoint exactly how it works. So mutual funds is a very common one in the local market, and it's presented as something that's beginner friendly, right? what is a mutual fund?
Well, actually, it is a very good place for a beginner to start. And a mutual fund basically is a pool of securities. So, and that pool of securities is what you're actually investing in. So that is going to offer a beginning investor diversification. So as opposed to them taking their money and going to buy one individual stock, where if the price fluctuates, they could lose everything.
Right.
They are now buying into a pool of investments, because what's going to happen is those investment managers for that fund are going to be investing in different securities. Okay?
Right. One of the ways I like to think of it is, I'm sure many of us, our grandparent mothers would have made the saying, don't put all of your eggs in one basket.
Definitely.
That's diversification. So the principle of diversification is, if you have all of your eggs in one basket and the basket drops, you lose all of your eggs. But if you put your eggs in different baskets, even if one egg drops or one basket drops, you don't lose all of your eggs. So as Belinda said, that's the benefit of diversification.
So can I diversify by, let's say, having some money in the bank, having a mutual fund, and then a couple apartments on rent? Can I do that?
Yeah,
you
I
can.
mean, so sure you can. When I think of, or the way I would put it is, when you think of your investment portfolio, think of everything that goes into it. So separate your house, your primary place of residence. All of the other things that are earning you income and what you have money invested in, they make up your investment portfolio. So that can include real estate. That can include cash. Cash is an asset. It's not a high yielding asset, but it is an asset. It includes mutual funds, any bonds you hold. So I was doing my physical once, and my doctor said to me, but my main investment is my practice. I said, yes, that's private equity. But you need to diversify that with other assets, public equity, fixed income, cash.
Yes. Yes.
Awesome. So back now at the beginner stage, I'm just leaving college. What do I do? Where do I go? Who do I speak to?
Well, I would say you need to seek out a reputable broker.
Okay.
And then once you go in to see that broker, if you're a young person, like you said, you're just leaving college, you may have not even gotten a job yet. You want to have that discussion with your broker about letting him know how much you have to invest, what your risk appetite is. And then the broker can give you guidance on what may be the best option for you, based on the products and services that they have available. But as a young person, again, we're going to say with the mutual funds, it's a good way to start, because especially with young people, you have a lot of time. So because you have a lot of time, you can actually take more risk. So you may be looking at going something, and of course that's, like I said, if that's your risk appetite, but you'd be looking at something maybe like a high risk fund, mutual fund, because you have time for the ups and downs or volatility that can actually happen in the market, and to get a higher return, to get a better return.
Holland, help me here. Some big words Miss Payne is throwing out here today. Risk appetite. What is that?
Right. So I would think, if you're an investor, think of your life and think of it as a financial roadmap. At different points in your life, you're able to take on different levels of risk. And one of the basic principles of finance is risk equals return. The more high risk an investment is, the higher return you can typically expect to make on it. But that's obviously balanced by the fact that since it's higher risk, there's more chance of a loss. So the risk in the context that Belinda used it means the more chance there is of a loss, or more chance of you not meeting your expected goals. But over the course of a financial roadmap, let's say you start at age 20, you're able to take on more risk. At age 40, you still have time to make it up, you're not able to take on as much. By the time you're at age 80, you're trying to protect your capital and ensure you don't lose any money, because you want to ensure that, one, maybe you're able to meet your distribution goals to family, but two, you're also not in a situation where you're penniless in your golden years.
Perfect.
Definitely.
And the Bahamas International Securities Exchange, what is that?
So BISX is a marketplace. And think of a marketplace, let's go to a context. You go to the produce exchange. There's you go to a farmer's market. There's buyers and there's sellers. There's people trying to buy produce, and there are people trying to sell produce. Now let's take it to a securities example. There are buyers and there are sellers, people selling their shares, and there are also buyers, people buying their shares. And the exchange is the referee in the middle, ensuring that this happens in a transparent manner where the buyers and sellers have confidence in the results. Now, when I say confidence, I don't mean you're confident that you're going to become a billionaire when you buy this one share. What I mean is you have confidence that, one, information was disclosed. Because the fuel of investing is information. We want you to be able to make an informed investment decision. And that's what the exchange is. It's the referee that allows you to make that informed investment decision.
So can I contact you to say, is this a good stock to buy?
No, you would go through one of the BISX broker-dealer members, such as Belinda here,
Yes.
or because all of my children, I love all of my children equally, any of the other BISX broker members listed on our website.
And what is that?
www.bisxbahamas.com.
Okay.
I was about to say your website is an electronic bulletin. I'm sure you can edit that out. What is a website? What are you asking me?
Let's come right back to the conversation, though, about investing for beginners. COVID has introduced some uncertainty that we've never seen, not in my lifetime. I'm a bit young, on the younger side. But is now a good time to invest?
Now is the best time, actually.
Why is that?
Yeah. Well, because simply at this time you can find stocks that you may be able to get some opportunities on or purchase at a lower price, okay? And so, of course, the idea is, so there are opportunities in the market, basically. So this is a good time to get in. Now, but what you want to do is you want to look at the investment as long-term, consider your asset allocation, and just remember that this is not a quick profit, that this is going to be for the long term. But those people who are sitting on the sideline saying they're waiting for a vaccine, they're waiting to see what's going to happen, whatnot, you know, you've already lost, because the time that you've delayed thinking about starting investing, that 12 months that's already gone, you've already lost. So that's why the time is now. Just move ahead and start.
Only thing I'd add to that is good habits are always good to start now. Savings and investing are good habits. They're good financial habits. So there are good physical habits, exercise, eating well. There's good mental habits, reading books, doing crossword puzzles. But there's also good financial habits, that's savings and investing. So even in times of recession, where you'd say, well, that's not a good time, it's always a good time because positive habits are cumulative. And good habits are the result of doing things over and over again.
Can I ever be too old to start investing?
No, I think it's just the type of investment that you will go in would be different. So going back to my question about a financial roadmap, my mom's 70. Me and her would not necessarily invest in the same thing.
Okay.
Nor should we. But that doesn't mean she shouldn't invest. She hopefully has many more years. So she needs to, one, protect her capital, and that means accounting for inflation, all of that. But two, making sure that her money continues to work for her.
Okay. Ms. Payne, in giving advice to someone who may be approaching retirement and they have made they have not invested in the past, what would your advice be?
Well, I mean, simply to say, like he said, for that person, hopefully they're coming to me maybe with some lump sum, even though they've not invested, they have savings.
Okay.
And they're coming to me with some funds, and basically because of their age, I'm going to tell them that they need something that's low risk.
Okay.
So I'm going to recommend that they go in something that's going to preserve their capital, which is very important at that age. And then I guess I would discuss with them the option of, since you know you're in that age where you're already retired, do you need income, or can we put this money up if it's something you don't want to touch? Because if they're going to need income, we don't want to lock up the money where they may end up paying a lot of fees to have to get the funds out when they need it. If they are at the point where they need to actually start getting income. So basically, I would just tell them that a fixed income option, either investing in a bond fund or directly into some type of corporate or government bond, would be their best option where they're going to get. That should be low risk here.
Perfect. Closing words.
Education and information are great habits that help you become a better investor. We have so much more access to information than when I was first starting to invest. You know, sites like Investopedia, I'm a part-time UP teacher, and I actually still, in my class, use Investopedia for my students. So, but it's also going to reputable sites and getting an informed idea about risk versus return, because that's the principle of investing. And so being able to get a reasonable and informed idea of those basic principles will propel you on and make you a better investor.
Thank you for watching. We hope you were able to gain some valuable insights from our guests. Don't forget to post your questions in the comments and join us right here this Friday to get them answered. For the full list of this week's activities, visit rfgroup.com/investwell, where you can also set up an appointment with an RF investment specialist if you're ready to dive into investing. Follow us on social media using the handles @RF Bank Trust and @BISX Exchange to stay up to date on everything that's happening. I'm Jackie Cleare. I trust you'll enjoy the rest of your day.